Hey guys, this is Tim with Tim Stout & Associates, Compass Real Estate, your trusted real estate expert for Coweta and Fayette County. And today I have with me
Makinley Cook with United Community Mortgage Services.
And we're going to be talking about down payments. Down payment is something when you buy a property, you have to bring a certain amount to the closing to transfer before you will loan the money, correct?
Correct. Yeah.
Okay, there's different types of loans out there. There's FHA, there's VA, USDA, conventional.
Yeah.
So most of the loan programs fall somewhere within those, correct?
Right.
Okay.
Pretty much.
FHA is one that I see a lot of first-time home buyers using.
Yes.
So tell me about that.
So most of the time, FHA is a choice for first-time home buyers because it's a minimum down payment of 3.5%. The credit score minimums are much lower than a conventional loan. They'll accept a lot lower in terms of credit score, and then the debt to income ratios are a lot higher in terms of debt ratios for first-time home buyers too.
And debt to income ratio is you make this much, but you owe this much. So it's a certain ratio. It's got to be within a certain amount to allow them to loan to you.
Right.
So FHA is 3.5%. So if I buy a $200,000 property, I'd be expected to bring $7,000 to a down payment.
Exactly. Yeah.
Okay. Let's talk about VA. Now, who qualifies for a VA, and what's the down payment look like there?
So VA loan would be a veteran. So veterans, they do have to have a certain amount of time in as a vet to be able to get the veterans loan. I'm not exactly sure the time frame of how long you've had to serve, but there is a time restraint on how long you've served, and so you have to be a vet, and then it's 100% financing. So that means zero down payment. So you could technically walk out without putting anything down.
Okay. So I could buy a $200,000 property and owe nothing right off the bat.
Pretty much.
Okay. USDA.
USDA is also 100% financing, so zero down payment. The catch with USDA is it has to be in eligible areas. So it's a rural lending type of program, so it has to be kind of on the outskirts of most towns. In Coweta County, you're looking Grantville, Luthersville, kind of the surrounding areas of Coweta County.
Savoia, parts of Sharpsburg.
Yeah.
Okay. It used to be known as the Rural Development Loan, correct?
Yeah, that's exactly what it is.
So a lot of people know it as that. So that's zero down also. And then conventional. Conventional is a lot of people buying investment property use conventional. A lot of people want to use conventional because it bypasses PMI.
If you put 20%
If you put
down.
20% down.
Yes.
Okay, tell me about the down payment for that.
So conventional gets a little more tricky because there's a few different ways that you can kind of do a conventional loan. If you're a first-time home buyer, you can do 3% down on a conventional loan, but you're looking at higher credit score minimums and lower debt ratios. Conventional is very picky on what they will let pass through on a 3% down conventional.
Okay.
Your next step up is a 5% down, and then there you're pretty much regular conventional loan, 620 credit score, regular debt ratios for that. And then once you get to 20% down, that's when you no longer have private mortgage insurance.
So tell me about private mortgage insurance. So what is that?
So private mortgage insurance is technically something that protects the lender if you were to go into foreclosure. So it's an insurance that's given on behalf of the lender so that if you file for foreclosure before you pay the home off, then the lender is protected.
So the reason they require 20% down is because no matter how the market swings, for it to lose 20% would be rare.
Right. They're still going to make their investment back no matter what, most of the time.
Okay. So, okay, great. So what if, like our last video, we talked about how to improve your credit score. Mm-hmm. What if someone has worked hard and they've improved their credit score, they've paid off what they need to pay off, now they're ready to buy a home, but they don't have a down payment? What are some options?
So a home with no down payment, we would have to look at a few different things. The hard part is with most like grant programs that are going to help you with a down payment, you're going to have income limits. Okay. So we got to look at what's your household size, what are you bringing in as your gross income per year, different things like that. So we do have like a grant that you could partner with an FHA loan that's $5,000 for first-time home buyers, but that does have an income limit. So like for a one-person household, it's $46,000. So if you're making over 46,000 and you're a one-person household, you wouldn't be able to qualify for that grant. Most of the time, probably the easiest way is to do like a USDA, but it still has income limits too, but you're looking more at like 92 and up on a USDA income limit.
What if I've been like working hard and putting money into like a retirement? How can that work?
Yeah, so you can pull from your retirement account. Most retirement funds will consider purchasing a home a hardship.
Okay.
So they will let you pull from the retirement fund without any penalty.
Nice. Okay.
So you can pull from a retirement fund, or you could get a gift. I know we've talked about that before. A gift would be something that maybe a grandparent or a parent or a family member or friend was willing to give you to help with your down payment. So if you had $2,000 to be able to put towards your $7,000, they would give you the other portion of the $7,000, and then you just have to verify that your donor is able to gift you the money, and there's your down payment.
Okay. So guys, it's a quick video explaining the different types of loan programs, the different type of down payments, and how to get around it if not having a down payment is going to be an option for you. If you have any questions, email, call me. I'll put you in touch with Makinley. Makinley is Tim Stout Associates' preferred lender. She's been that way for several years now, and she does a great job. And that's why we partner with her. If you have any questions, let me know. And remember, who you work with matters. And have a great day.